2025 could be the year that reshapes your entire financial journey. Crypto is more than hype. It's innovation, opportunity, and transformation all at once. But with thousands of coins flooding the market, how do you choose the ones that matter? The difference between a smart move and a costly mistake comes down to research. Let's be honest, Bitcoin is still the foundation of the entire crypto market. It's not just the first crypto, it's the most secure, widely adopted, and battle-tested digital asset. In 2025, Bitcoin will likely benefit from the 2024 halving, a built-in event that reduces new coin supply, historically triggering price rallies. Major companies and financial institutions, like BlackRock and Fidelity, are building Bitcoin ETFs, opening the door to massive institutional investment. Bitcoin is also becoming a macro hedge in unstable economies. While the returns might not be as explosive as small-cap coins, Bitcoin offers stability, liquidity, and trust, the pillars of any strong portfolio. Ethereum is more than just a currency, it's a platform. Most DeFi apps, NFT marketplaces, DAOs, and Layer 2s are built on Ethereum. It's the backbone of Web3. With the transition to proof-of-stake complete and scalability upgrades like sharding on the way, Ethereum will process more transactions faster and at lower cost. This unlocks a floodgate for mainstream adoption. Plus, the Ethereum developer ecosystem is the largest in crypto. Big companies like PayPal and Visa are experimenting with ETH-based solutions. If Bitcoin is digital gold, Ethereum is digital infrastructure, and every digital economy needs that. Solana is known for its speed, boasting over 65,000 transactions per second with extremely low fees. It has rapidly become a hub for DeFi, NFTs, and Web3 gaming. Projects like Helium and StepN are using Solana for real-world adoption. While critics point to Solana's past network outages, its technology has matured significantly, and the developer community remains active and resilient. With the rise of decentralized social platforms like Lens and real-world infrastructure apps on-chain, Solana is becoming a digital city of its own. If it maintains uptime and expands partnerships, SOL could explode in 2025 as an Ethereum alternative. Polygon isn't trying to compete with Ethereum, it's helping it scale. This Layer 2 solution processes thousands of transactions with minimal fees, solving Ethereum's most pressing problem. But that's not all. Major brands like Reddit, Meta, Facebook, Adidas, and Starbucks are integrating Polygon for NFT and loyalty programs. Polygon is also launching ZK-EVM, Zero-Knowledge Ethereum Virtual Machine, to bring even greater speed and privacy to Ethereum-compatible smart contracts. With growing enterprise adoption and seamless integration into Ethereum's future, Matic is positioned as one of the most business-friendly crypto investments heading into 2025. Smart contracts are powerful, but they need data to interact with the real world. That's where Chainlink comes in. As the most used Oracle network, Chainlink supplies decentralized and secure data feeds to thousands of DeFi apps. Stock prices, weather data, sports results, you name it, Chainlink brings it on-chain. With innovations like Chainlink Functions and the upcoming Cross-Chain Interoperability Protocol, CCIP, Link is enabling blockchains to talk to each other. This infrastructure is invisible to most users, but essential. As blockchain use cases grow, Chainlink becomes more valuable, making it a smart long-term hold. Ethereum's growth depends on Layer 2 solutions, and Arbitrum is leading the pack. It uses optimistic roll-ups to process large volumes of transactions off-chain, then settles them on Ethereum. This makes it faster and cheaper while keeping the security of the main chain. Arbitrum has quickly become a top destination for DeFi, with high TVL total value locked and growing developer interest. RB also launched its token recently, and new use cases are emerging around governance and staking. As Ethereum scales, Arbitrum will be central to its ecosystem, making it a coin to watch in 2025. Render is an exciting project that's leveraging unused GPU power for 3D rendering, AI development, and metaverse graphics. As demand for AI processing skyrockets, Render allows anyone with spare GPU capacity to earn tokens by contributing computing power to the network. It's already being used by Hollywood studios, digital artists, and game developers. With the explosion of virtual worlds, VR, and AI content, RNDR sits at the intersection of creative production and decentralization. If the future is digital and immersive, Render will be the infrastructure behind the visuals. Avalanche stands out for its customizable subnet architecture, which allows developers to create private or public blockchains tailored to specific needs. This is especially attractive to governments and corporations wanting blockchain benefits without exposure to public chain volatility. The network is ultra-fast and energy-efficient, processing thousands of transactions per second. Avalanche is also home to a rapidly growing DeFi and NFT scene. Its developer tools are intuitive, and partnerships with big names like Deloitte show that enterprise-level trust is forming. If you're betting on institutional use of blockchain, AVAX is a smart inclusion in your portfolio. In a world with hundreds of separate blockchains, interoperability becomes crucial. Cosmos was designed to connect them all. Using its IBC protocol, inter-blockchain communication, Cosmos lets chains exchange data and value seamlessly. This means Cosmos could power a future where apps move across chains like web apps move across browsers. Projects like Osmosis, Secret Network, and Kava are all part of the Cosmos ecosystem. As the crypto space grows more fragmented, Cosmos becomes the glue that holds it together, making Atom not just a coin, but a bet on a connected crypto future. Built by former Meta, Facebook engineers, Sui and Aptos are blazing fast Layer 1 chains designed with parallel execution and smart contract flexibility. They claim to solve the blockchain trilemma: scalability, security, and decentralization. Although still in early stages, these networks have strong developer momentum and significant venture capital backing. Their main goal is to support real-world apps at web scale, from gaming to finance to identity systems. They're not proven yet, but that's why they're exciting. High risk, high reward. If you're looking for the next Ethereum-style moonshot, SUI and APT are early bets worth watching. Toncoin is deeply integrated with Telegram, one of the world's largest messaging apps with over 800 million users. This gives Ton a unique distribution channel for wallets, dApps, and microtransactions. Imagine sending crypto as easily as a text. With Telegram's native wallet and Ton's fast, scalable chain, this combo could onboard millions to crypto without them even realizing it. In 2025, we might see a surge in usage just by Ton being accessible to non-crypto users. If adoption matters to you, Toncoin has unmatched potential in reaching the everyday consumer. The graph indexes blockchain data so apps can access it quickly and efficiently, similar to how Google indexes websites. It enables features like search, filters, and analytics for DeFi, NFT, and Web3 apps. Without it, dApps would be slow and hard to use. GRT is the token that powers this network, and it's already being used across major blockchains including Ethereum, Polygon, and Arbitrum. As more data moves on-chain, indexing becomes critical, and the graph becomes more valuable. It's an infrastructure play, not flashy but deeply important for a functional crypto ecosystem. Hedera is a public network that uses a unique consensus algorithm called Hashgraph, which is faster, fairer, and more energy efficient than traditional blockchains. What truly sets HBAR apart is its governing council, which includes global giants like Google, IBM, LG, Boeing, and Deutsche Telekom. These aren't just name partnerships. They actively run and govern the network. Use cases for Hedera include supply chain tracking, tokenized carbon credits, digital identity, and micropayments. With enterprise adoption steadily increasing, Hedera could quietly become the default network for corporate blockchain solutions. It's a hidden gem for long-term thinkers. While stablecoins like USDT, USDC, and DAI aren't investment tokens in the traditional sense, they are essential for any smart portfolio. In uncertain markets, stablecoins offer a way to protect capital while still earning through staking, lending, or liquidity pools. Platforms like Aave, Compound, and Curve allow users to earn steady interest, sometimes 6 to 10% annually, just by parking their funds. In 2025, as regulations tighten and crypto gets more institutional, we'll likely see tokenized dollars, euros, and more being used in both traditional finance and DeFi. Stablecoins are where yield meets stability, and they play a powerful supporting role in wealth building. Knowing the best cryptos is only half the battle. How you structure your portfolio matters just as much. A solid strategy could look like this: 40% in foundational coins like Bitcoin and Ethereum for stability, 30% in emerging altcoins like Solana, Polygon, or Chainlink for growth, 20% in high-risk, high-reward projects like SUI, Toncoin, or Render, and 10% in stablecoins for flexibility and yield. Don't go all in on hype. Look at developer activity, use cases, real adoption, and most of all, your risk tolerance. Crypto is a long-term game. Diversify smart, take profits when needed, and always keep learning. 2025 won't reward the loudest voice. It will reward the most prepared mind. The coins we've covered aren't just digital tokens, they're building blocks of a new financial and technological era. The real gains come not from chasing what's hot, but from understanding what's real.